You're listening to Southeast Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Challenge us at Wexford Insurances 0818 31 30 30.
I'm now going to an interview that I recorded earlier this week with Brian Nevin, head of the personal insolvency team at Hughes Blake Chartered Accountants. I started by asking Brian about his own background.
Sure, Karl. I've joined Hughes Blake earlier this year, February of this year. But prior to that, I worked for many, many years with AIB in various roles on the investment banking side, on the private banking side, where I was very much on the customer side. And in my final years in AIB, I worked in the risk management side, particularly in the whole area of credit policy, where I was very close to what is starting to emerge now in terms of dealing with the whole area of customers in difficulty, customers with significant unsustainable debt. So I have, I suppose, good experience in that side.
So your role now with Hughes Blake is really to look after the personal insolvency department and to help people to put sustainable plans in place in terms of how they can get out of debt themselves. Yeah. NAMA was set up a couple of years ago as a vehicle for underperforming loans or damaged loans to take them off the balance sheets of the banks across the country. Has it worked?
Well, I think it has, yeah. I mean, I think you're absolutely right. But, we had the boom, which was largely property related. And we ended up in 2008, 2009, where you had massive loans, with developments here in the UK and so on. We all know the scale of them. And, what was agreed was a very sensible solution, because that was holding back banks' ability to lend to small businesses, to individuals, and therefore those loans were taken off and put into the National Management Agency to be worked out, essentially. And I think, by and large, that process is progressing well and positively.
However, I suppose what business people and what consumers expected was that it would free banks up from that debt to be able to move on and to provide businesses and consumers with loans. But that hasn't happened. Yeah,
no, you're absolutely right, Karl. I suppose what subsequently emerged was that there was a realisation that there was a deep problem right across the banks within their retail portfolios, within their SME portfolios, where a lot of private individuals, I'm not talking about the big developers, had developed, I suppose, their own portfolios of properties, be they buy-to-let properties or commercial properties or investments related to investments abroad or whatever. And these were essentially now being recognised as unsustainable. And I suppose that's the problem that is holding people back at this point in time. And it's not untypical that you find many private individuals who have got a principal private residence, which is leveraged, but also fully leveraged properties, and that is the problem that needs to be solved.
I suppose the most up-to-date information is telling us that mortgage debt, there's a serious problem out there in relation to that, because over 100,000 loans are in arrears of over 90 days, which has a major impact on spending, and SME debt is a troubling 50 billion, of which 25 billion is impaired.
Yeah, I mean, these are statistics that are out there in the marketplace from the central bank and from the regulators generally. I mean, there's a lot of media coverage around how the whole mortgage debt situation has grown over the last number of years, and it's almost touching 100,000, as you say. And clearly, that is the elephant in the room. That's what needs to be resolved, and it is having an impact on people's ability to participate in the economy. It's impacting spending. So that's the problem, and it needs a solution.
What is that solution?
Well, I think the solution is starting to emerge. We've spent a couple of years working at this as a country. Many people would say, we haven't made progress, and it is a serious problem. I mean, I think it was an IMF report that stated Ireland went through the biggest boom and bust in history, and that was really our association with property and property lending. The solution is going to come, and I think part of the solution has been the new Insolvency Act, which went into law last December and is currently in the process of being enacted and rolled out. We expect the Insolvency Service, which has been set up, an independent service, part of the court service, and they have indicated this themselves, to be open for applications for the new insolvency arrangements in later in August, either August or early September. That's the expectation.
What difference is that going to make to business owners and consumers alike?
Well, what it's going to do is it's going to provide them with options that they can consider in terms of dealing with unsustainable debt. And I think what's important, it isn't just that piece of legislation, but certainly what I'm seeing in terms of my engagement with banks, and I suppose my association with banks, different banks in the country, is that banks are certainly starting to organise themselves to do deals and to negotiate unsustainable debt and try and work through it. I think people recognise that the SME sector is crucially important in terms of jobs. Many thousands of SMEs out there, and they will be the linchpin to ensuring that this economy starts to grow again.
What's the bank's opinion out there today, in your view, in respect to this Personal Insolvency Act? Are they taking it seriously?
Well, I think they have to take it seriously. I mean, it's an act that gives powers now to individuals to actually follow a particular track, and it's quite a prescriptive act in that. It introduces personal insolvency practitioners, and their job is to try and create an arrangement that works for both the creditors and the debtors. That may seem strange, but that's what it's about. It's an independent individual to try and work out a reasonable solution for both parties' perspective. So I think, in terms of to your question, are the banks taking it seriously? I think the banks recognise now that individuals are going to come to the table, and if they can get a consensual deal, a direct deal with the bank, that's in everybody's interest. But failing that there have to be other avenues that are available to them that they can follow through, and that's where the Insolvency Act comes in.
Now, as you said earlier, there will be a PIP, a personal insolvency practitioner, that will be independent between the two parties. I suppose an arbitrator almost.
Correct.
In respect to this process, looking to negotiate between the lender and the borrower. Mm-hmm. Tell me, how do you see this working? What's the process? Okay,
well, the Insolvency Service. It's a very good website, and there's a lot of very good information. I would encourage people to have a look at that. But within the Insolvency Service, there will be practitioners, personal insolvency practitioners appointed. Okay, they're registered, they're qualified, they have to go through a qualification process. They will be accountants, they will be financial advisors, they may be solicitors and whatever. The process that they go through is that the debtor, the person who has borrowed the money, will go and seek out one of these, and on the website there's a list of practitioners. They seek out somebody in their locality. They'll go in and they'll sit down and they'll decide to appoint them to look after their particular situation. The insolvency practitioner will go through a lot of due diligence with the individual. They will go through what's known as a prescribed financial statement. It's basically a statement of their affairs, their assets, their liabilities, their income, their expenditure. And basically they will go through a process and apply for what's known as a protection order, which gives them 70 days to enable them to put a scheme arrangement, an arrangement together for the various creditors, the banks, which basically looks at trying to be reasonable and equitable to all the parties involved. And essentially, and again through the Insolvency Service, they will have issued guidelines, for instance, reasonable living expenses guidelines. Again, they set out typically what a family structure situation, and based on that family structure, what the expenditure would look like. So it's a pretty prescriptive process that people will go through.
Are you finding that there's lots of people out there today that are just not engaging with their financial institution?
Well, I think there's a percentage, is what I would say. I think, in fairness to the banks, over the last couple of years, they have been writing out to people and trying to get them to engage. There will always be a percentage of people that won't engage, okay? Personally, I think it's really important to engage. I think transparency is important. I think engagement is important. Cooperation is important. And I think if those boxes are ticked in terms of dealing with creditors, I think you have a better probability of getting an arrangement, a deal, getting facilitated. And certainly the indications from the banks that I have dealt with, they're prerequisites, to be open, to be honest, to be transparent. And that's a requirement in terms of, any dealing. I mean, for instance, individuals will be obliged to sign a statutory declaration of their affairs, and that will be very, very important.
And from your experience in dealing with the banks on behalf of clients, are you finding that the banks today are open to doing deals? Are we seeing debt forgiveness coming into the market yet?
Yeah, well, I mean, I think probably everybody is very well aware of the concerns around moral hazard, okay? And I would say that you're not going to get blanket debt forgiveness across the board. There are a lot of properties that are in negative equity, but property prices and property values can, and I'm sure will, increase over time. It's all down to sustainability, as I mentioned in the presentation. But I suppose coming back to your specific question in terms of debt forgiveness and so on, what I would say is that each case is dealt with on a case-by-case basis, and I have certainly seen situations where the banks are open to aggregating loans within an institution and identifying within those loans what's sustainable and what's not sustainable, and putting arrangements in place that where the sustainable piece, well, that's agreed and that is paid down over a period of time. An element of it maybe parked, for want of a better description, and if the loan performs and the individual performs, there would be an expectation that an element of it would be written off.
You're listening to Southeast Radio's Business Matters with Karl Fitzpatrick in association with Wexford Insurances. Think Wexford Insurances for your business insurance.